Have you ever walked through Bonifacio Global City or the Bay Area at night? The air hums with energy, a vibrant pulse of urban life. The skyline glows with modern towers, symbols of progress, ambition, and the promise of a brighter future. They pierce the night sky, beacons of architectural innovation. But look closer, peer beyond the dazzling facade. Many of these gleaming, multi-million peso condos are empty, unoccupied, vacant, a stark contrast to the bustling streets below. Dark windows, silent balconies, a void in the vibrant tapestry of the city, ghost towers in a bustling city, silent sentinels overlooking a world teeming with life. It's a paradox, a perplexing contradiction at the heart of urban development. A housing crisis and a housing surplus side by side. A tale of two cities coexisting in the same space. Construction cranes keep rising, relentlessly adding to the skyline. Yet entire floors remain vacant for years, gathering dust, untouched and uninhabited. The promise of vibrant communities feels hollow, a broken vow whispered in empty hallways when so many doors are locked, shutting out dreams and aspirations. Why do prices keep climbing, defying gravity and common sense when so many units are unoccupied? What forces are at play in this skewed equation? The answer, a complex web of factors, but one stands out. Condos are treated as investments, not homes, mere assets in a portfolio, detached from the human need for shelter. Millions dream of living closer to work, escaping the daily grind of long commutes, but the units built are out of reach for most. An unattainable dream, shimmering just beyond their grasp. The market is driven by speculation, fueled by the promise of quick profits and high returns, not genuine demand, not by the real needs of the people who call this city home. So, we see a city where supply and affordability are completely disconnected, a broken system failing to serve its people. Prices defy logic, soaring to astronomical heights, rising even as vacancies soar, a bubble waiting to burst. This isn't just about real estate, it's a reflection of deeper societal issues. It's about who benefits from growth and who's left behind. The widening gap between the haves and have-nots. The empty towers tell a deeper story, a cautionary tale of unchecked ambition and misplaced priorities, about the future of our cities and the people who live in them. A future we must shape with intention and equity. Oversupply means there are far more condos for sale or rent than people who can afford them. It's not about lack of interest, just lack of affordability. Vacancy rates in Metro Manila have soared into double digits. Developers built too many units, banking on endless demand from investors and OFWs. Now, thousands of similar units sit empty in the same districts. The boom was fueled by speculation, not real housing needs. This glut puts pressure on developers and traps small investors. Most importantly, it exposes the gap between condo prices and the average Filipino's income. The buildings are there, but the real market isn't. The oversupply crisis is front-page news, backed by hard data. Colliers Philippines and other experts report vacancy rates as high as 17%, tens of thousands of empty units. The POGO exodus made things worse, exposing the market's reliance on a single, volatile demand source. Headlines warn, condo glut worsens, vacancy to rise. Reports show it could take years for the market to recover. The data is clear. Supply is overwhelming, but sustainable demand is missing. the numbers force us to confront the reality behind the city's glittering facade. So, who's buying these condos if most Filipinos can't afford them? The answer: local investors, wealthy individuals, and foreign nationals. Many buy not to live in, but to rent out or resell for profit. Genuine end users, upper middle class families, and professionals are a small minority. OFWs have long been a key market, but even they're now cautious as prices soar and rental demand weakens. The bulk of buyers treat condos as assets, not homes. The market is built on investment, not on the needs of ordinary families. This disconnect leaves most Filipinos locked out. Foreign buyers, especially from China, have played a huge role in Manila's condo boom. Philippine law allows foreigners to own up to 40% of a condo project, fueling international investment. Developers set prices for foreign wallets, not local salaries. This drives prices up even as units remain empty. When foreign demand drops, as with the Pogo exodus, the market is left exposed. The result: a pricing bubble disconnected from local reality. The Filipino workforce is priced out, while towers cater to overseas investors. With so many unsold units sitting vacant, a clear sign of oversupply in certain segments, developers turn to increasingly creative marketing strategies to entice potential buyers. They offer stretched or even no down payment schemes, a seemingly irresistible offer for many aspiring homeowners. This tactic involves making monthly payments seem incredibly affordable, almost too good to be true, but often hiding the real, long-term costs within complex contracts and hidden fees. After years of making these seemingly easy payments, diligently paying each month, buyers are often shocked to face huge balloon payments at the end of the term, or steep, unexpectedly high mortgages. Freebies, shiny new appliances, all expenses paid trips, or waived fees are strategically dangled as irresistible incentives to close the deal. Rent-to-own schemes, with their promise of eventual ownership, sound incredibly attractive on the surface, but the underlying contracts are often complex, filled with legal jargon, and potentially very risky for the buyer. All of these tactics work together to create an illusion of affordability and accessibility, but the long-term financial burden can be incredibly heavy, leading to significant debt and financial strain. Ultimately, the primary goal is simple: move inventory, sell those units without having to resort to lowering official prices, which could devalue existing investments. Buyers are often lured in by these attractive but ultimately short-term perks and incentives, focusing on the immediate gratification rather than the long-term value and potential return on investment. In the end, the real winners in this game are often the developers themselves, and unfortunately, not the average Filipino family striving for a better future. This continuous cycle of promotions keeps the real estate market afloat, artificially propping up demand, but ultimately doesn't address or solve the core problem of genuine affordability and accessible housing for all. Can the average Filipino realistically afford a condo in Metro Manila? It's a question many are asking as they navigate the complexities of the real estate market. The numbers paint a stark picture, suggesting that for many, the answer is no. A basic unit in a decent location can easily cost anywhere from 4 to 7 million pesos. Even with a substantial 1 million peso down payment, prospective buyers are still looking at hefty monthly mortgage payments, often hitting the 30 to 35 peso range. This is a significant financial burden for most families. To comfortably afford such a mortgage, financial advisors typically recommend earning at least 100 0 pesos a month. That income level is far, far above the median salary for the average Filipino worker. The reality is that most professionals, even those in stable, white-collar jobs, earn only a fraction of what's needed to comfortably afford these condos. It becomes clear that these condos are primarily built and marketed for a tiny, wealthy segment of the population. So, for the average Juan de la Cruz, the dream of homeownership in the city, specifically in these modern condos, remains largely out of reach. The dream remains a dream, often deferred and sometimes even shattered by the harsh economic realities. Instead, most are left to grapple with the challenges of renting or enduring long, often grueling commutes from more affordable areas outside the city. Condos, which were once seen as a symbol and a promise of progress and upward mobility, now, for many, symbolize the deepening inequality that plagues Philippine society, highlighting the growing divide between the haves and have-nots. The aspiring middle class is hit hardest. They work hard, earn more than average, but still can't afford a decent condo. They're squeezed out, too rich for socialized housing, too poor for market rates. As prices rise, the dream of homeownership slips further away. Young professionals delay marriage, family, and stability, stuck renting or saving endlessly. The city's skyline becomes a symbol of exclusion, not opportunity. A transient, disconnected urban population grows. The promise of condo living is denied to those who drive the economy. The result, frustration, disillusionment, and a sense of unfairness. The dream of a home is perpetually postponed. Metro Manila's condo market stands at a crossroads. The investor-driven model is unsustainable. The disconnect between prices and real demand can't last. The challenge: will developers and policymakers keep building for the wealthy or pivot to real affordability? We need smarter, more inclusive urban planning homes, not just assets. Solutions like inclusionary zoning and new financing models must be explored. Housing should be a right, not a luxury. The future of our skyline depends on the choices we make now. Will we build a city for all, or just for a privileged few?